Hi, this is Dr. T here. This round, Dr. T would like to share with you a new topic here, which is the growth stock versus the momentum stocks. One is planning for the long term, one is planning for the short term. So Dr. T, how can we have the best of two worlds? Okay, so here today, I'd like to prepare, in fact, 4 case studies. Okay, 2 from USA, BlackRock and the Alphabet or Google, and Singapore will be this the Hourglass and this Tianjin Zhongxin, right? The pharmaceutical company. Okay, so in fact, these 4 giant stocks also representing 4 different sectors, right? Promising sectors, which could benefit from the this pandemic recovery. And Dr. T will also share the current market outlook both in USA and also in Singapore, right? So the so-called 四大天王, Okay, without further ado, let's start from here. And just a reminder, right? This is just for educational purpose. All right, so Dr. T will train you how to make your own decisions. So you could have a long-term personality, you could have a short-term personality for trading, right? How to combine both together, right? So this will be a unique topic today. All right, so let's move on. Before that, a quick introduction of Dr. T. All right, so I have 20 years or more this investment experience. At the same time, I've achieved financial freedom long time ago, right? So this is my regular sharing, right? You can actually read more, right? Both my past articles and also the video education in this blog here, ein55.com. Okay, yeah, so far a few hundreds of those has been written over the last few years. Okay, when you have time, go and learn further. Okay, let's proceed with our topic today, right? But before that, let's cover a little bit on foundation, right? Meaning, what are the necessary factors to make decision? So here, let's follow Dr. T, right? Basic principles, looking for a giant, right? The best is actually a portfolio of 10 to 20 giant stocks. A giant, not necessarily the biggest, but it has to be strong internally. Even a small company could be a giant stock. Okay, yeah. So at the same time, looking for a giant to fall down, right? Wait for example, the price correction, but don't go in too early, right? Wait for the right timing to help the giant to wake up. So at the time, right, giant, the share price will be, stronger. So you could actually go in before it climb up again, right? It could be, we call it the, a downtrend or counter trend, right, strategy, which may not be suitable for most of you. So today we are talking probably more of training trading, right, to combine with the longer term investing. Okay, so this is the plan. All right, let's move on and understand a bit on the core strategies, the LOFTP: levers, 1, 2, 3, 4, optimism, fundamental analysis, technical analysis, and personal analysis. Okay, there are many different schools of thought, for this investing or trading. But throughout Dr. T, over 20 years of experience, I believe this is, probably one of best integration. All right. Firstly, is on the fundamental analysis, looking at the company business. Right, we call it the value, and at the same time focusing on the share prices. All right, through technical analysis, and more importantly, overcoming yourself. Too many people learning the secrets to make money, ignoring, the key is actually overcoming oneself, right? So personal analysis or PA, or the mind control of the greed and fear. And through that process, we use optimism to see the gap between the fundamental and technical world, and to buy low, sell high, or even you can buy high, sell higher. Right? There's different ways to, mechanism to make money. At the same time, aligned to your unique personality, right? You can apply across, from stock even to property and the rest. Today, we are focusing more on stock market here, right? And more importantly, integrating across different sectors, right? For example, just now, we'll cover the 4 stocks later on, right? Those 4 stocks correspond to 4 different sectors or industry. At the same time, all right, today we're covering at least 2 different countries. For example, USA versus Singapore, right? Each one would have actually their unique this a pattern, and you need the different strategies as well. And more importantly, they align to the whole world, which is level 4, right? So let's move on. Throughout the session, we can apply more of this LOFTP. Okay, so but before that, a quick introduction of what is optimism. Firstly, we need to get this evaluate the intrinsic value. All right, value is what you get and the price is what you pay. Once you define the value, the rest will be easier, right? You can categorize 5 different levels from 0 to 100% optimism. We buy, all right, this investment could be stock, could be property, anything, right? Or even Bitcoin. Less than 25% optimism, right? Or simply buy low and then hold it between 25 and 75% optimism. And at the same time, right, you can actually sell above 75, right? So-called sell high. At the same time, wait for correction and buy low again. So buy, hold, sell, wait, right? Or even can do shorting, right, from high if you want to. Okay, this is just a quick introduction. Later on, I'll use a real practical to show to you, right, in terms of application of optimism. One of the LOFTP, and which is also one of the Dr. T 55 styles. LOFTP is just 5 of Dr. T, right? Unique 55 styles. At the same time, right, looking for winter time to go in, meaning when other people are not interested in that stocks, right? So not truly a winter, but the technical means, right, when other people are not interested or when other people are fearful, right, how to go in. At the same time, when market is bullish, for example, when USA is bullish, right, how can you get out, right, when other people are actually excited or greedy, right? Of course, not necessarily you have to buy low, sell high. You can also buy high, sell higher. Okay, so there are many ways aligning to short-term, mid-term, or long-term investing. All right, today we are focusing more of a short-term versus the long-term here to integrate. By right, this is the 2 extreme of the investing strategies. Right, but through today this unique topic, right, you can actually integrate both together. Meaning one person, right, could be interested in investing, one person could be interested in trading, but there could be time, right? These two could be, all right, aligned. Okay, although that kind of opportunity, right, may not be a lot, especially for short term, right, could be changing from time to time, right? Although the long term opportunity will be more sustainable. Okay, we continue. All right, firstly, all right, looking for the giant to fall down to low so that your upside is more than the downside, right? Just remember that. But optimism is simply, right, one of the Dr. T 55 styles, right? So you still need to integrate with the rest. But today, I will apply that more extensively, but also verbally, right, covering a few other these factors so that you understand how to analyze it, right, in the total, right, view of it. Okay, let's look at the details. Right, so now move on to the market outlook. Here is not just on Singapore, right? So in fact, I should add one more is the USA here. So it's a Singapore plus USA. So let's start with US first. So this is US long term. So optimism can be customized for long term, medium term, and short term. Right, so long term you can see, right, roughly every 5 to 10 years you can buy low. So right now optimism is 96%. So what does it mean? It means the downside is very, very high, right? But at the same time, the upside is limited. But it doesn't mean that the market will actually fall down after it hit 100%, right? For example, similar to like the dot-com bubble in year 2000. But it simply means that when optimism is getting higher, especially exceed the the risky 75% level, right? You see, after rebound from the pandemic, this crisis last year, right? You need to apply more on the shorter term trading. Okay, yeah. So although you could be very excited, wow, USA, those growth stock getting stronger and stronger, right? And at the same time, you worry whether the sky would fall down, right? If next global financial crisis may come, yes, it has a potential may drop over 50%, right? That's a natural market cycle, right? So we move on to the medium term, right? Instead of, every 5 to 10 years, we can look at the maybe every 6 to 12 months. So after the pandemic crisis last year, That was a good entry point. Again, now is 98% optimism. This is slightly outdated by a few days, right? If you listen to my video for the first day here, right? But in the last few days, US has been going up, including tonight. I'm taking a video right now at night time. So just now see the market opening, right? So, but remember, right? Even for the short term, the same thing, right? This is, we call it the stock market in the short term, right? It's a voting machine, up, down, up, down, up, down, down, up, down, up, right? But in the longer term, right, it's a weighing machine, right? So that's why the #1 economy, USA, right? That is actually one of the key consideration when you do a level analysis. Make sure the company, right, you're investing is protected by one of the giant sponsor, right, which is the country. For example, when USA in trouble, right? So do you think the Federal Reserve, right, will do something about it? All right, answer is definitely yes. Okay, it just depends on which way and how it does it. For example, during COVID-19 time, right, again, you repeat the last, crisis in this subprime crisis here to print money, right, to lower down the interest rate to nearly 0%. Right? Although that will be back to normal, okay, one day. So that's why later on we'll touch on one of this giant bank stock, which could be sensitive to the change in the interest rate. Okay, let's move on to here. So right now, good news is despite medium term and long term, USA is high, but the short term, just recovering from a lower optimism, right? So in the last few weeks, there was a nice this entry, right, for this US. Right? In fact, this study outdated by a few days. So right now, I believe the optimism is like extra a few percent higher, right? Due to the more bullish US market, which almost every few weeks or even few months, you will achieve a new high, a new high, a new high again, right? Until you so worry, Dr. T, will the sky fall down? This is a natural market behavior, right? For sure, one day, right, the market will fall down. The only question is when. If you get out too early, what if it goes up another, let's say 20, 30% before it fall down? So if you do nothing, you could miss it. So that's why a dilemma for whoever worrying, right, a stock or index at a high optimism, right, while it still continue going up. In fact, US is actually, we call it momentum, this stock plus growing momentum index and at the same time growing index. So one of the compromise plan is, you can position shorter term. Even you're doing investing, you can enter or exit, right, with a shorter term signal, right, simply because of the higher optimism here. While for the Asian stock market, including Singapore, then you have the option, can apply probably slightly longer term. Okay, so you look at the Singapore market here. So every roughly 5 to 10 years, in the last 20, 30 years, right, you can see the optimism, right, it works very well with the Asian stock market, including Singapore. So pandemic time, it dropped to low optimism, right, again. So it's you can see how reliable is this optimism technique. But you don't need to buy at the lowest and sell the highest. Just buy low enough, just sell high enough. Even you don't need to sell high, you just buy low, sell at a fair price, and you're protected by a giant called Singapore, right? Singapore is protected by 30 STI, the 30, right, biggest market cap, these giants. Okay, to be more correct, all right, they may not be all giants. I should say 30 these are bigger stocks, but not necessarily all are giants. Okay, according to Dr. T, this is a giant criteria. But the majority, they are giant stocks. All right, so there are roughly 700 plus stocks in Singapore. Investment grade is probably less than 100. So that's why if you do not know how to choose a giant minimum, you just buy this STI. But STI, one of the weakness is the growth is too moderate, right? As compared with like USA. USA, the growth is tremendous, right? But at the same time, if you know how to time for this low and high here, in fact, cyclical stock is one of the best way to profit from this Singapore market, right? Provided you know what stock to buy. Even you don't know what stock to buy, at least you consider the STI index. Okay, yeah. So look at here. Right now, index is at 40% optimism. Okay, I think today, all right, because I here outdated by 1 day, all right. If you look at today, the price is slightly higher, but optimism in the long term won't change much. Okay, probably another 1 or 2% more. Okay, so technically right now we are still giving you some discount. Anything below this intrinsic value here, you got the discount. All right, but from here the recovery, right, from low optimism could be quite fast in the last 1 year, right? And after that you need to be more, right, patient, right? Because the 3,000 plus minus 300 points, this is a long-term support or resistance, all right, for this STI. So in fact, the last peak of this STI was around probably 3,800 points. Yeah, so to break this high, right, we will need more energy. Yeah, so that's why not necessary you need to buy low, sell high, right? Right. If you want to plan to buy low, sell at this fair price. You see, if you buy low here, right, it's not too far away from here. Although some would like to actually take more risk, especially if you're protected by those stronger stocks like 3 major banks in Singapore, right? This DBS, OCBC, and UOB, right? All 3 have gone up more than 50%, right? It could actually have more potential, right, to go up. Yeah, but this is called the first half of the stock market. Anything less than 50% optimism, right? Anything over 50% optimism, this is also called the second half of the stock market. Right? It's like a football game, right? We got the first half and second half. Yeah, so usually in the second half, right, the players are quite tired already, so need a rest, right, in between, so need a break. Right, so but after the second part, then you know what is going on, right? One day the game will end the game, and so on, right, to reset the market again, right? But at the same time, the market, right, if it's a good index, right, we can see there's still growth. But whether you should buy and hold or buy low, sell high, okay, I'll say either way is fine, right? Or another better way, just buy low and hold instead of just buy and hold. Because when you buy and hold, you could be buy high and hold. So probably if you buy like SCI in the year 2007, until today, I think it probably just break even, all right? Because SCI can give you roughly 3% dividend yield, right? If you add the 3% dividend for the last roughly 14 years, probably just enough to break even if you buy at the high of 3,008, meaning you go in at the highest optimism at the same time, hold as a long-term investor. So that's why optimism can help you to maximize your gains and minimize the risk. Okay, because all these are the so-called systematic risk, right? Systematic risk could be, you know, a black swan, a global financial crisis, you know, maybe COVID-19. Okay, so that's why the ability to buy low, that require patience. But all this opportunity is not easy, right? Because the sky would drop the gold bar only after roughly every 5 to 10 years. Can you control yourself not to buy stock over here? Not easy, right? So that's why a more practical approach, at least you buy below the this intrinsic value here, right? While some, right, with the price even over the high optimism, you can apply more on trading side. So since right now we are almost like a half court, right, of the first half and second half of your stock game. So that's why it's a transition from long term to this short term. So that's why for Singapore market, you know, is from more practical approach is I'll say between medium term and to short term. Although there's individual stocks in Singapore, you can still apply long-term investing, okay, but may not within today's scope, huh? Right, because we look at growth stock today, huh? So again, if you can buy low, sell high, all right, this is roughly 75% profit potential. Right, but there's no guarantee in future will be the same magnitude. Could be more, could be less. Okay, let's move on now to the medium term of it. Look at Singapore, right, in August. August traditionally, in the last 12 years, right, due to the seasonality. Hey, Dr. T, how come in Singapore, the last 12 years got 11 years, August, everything closed, you know, with a bearish signal. Okay, so if tomorrow will be the 31st of August, because I'm recording my video on the 30th of August. So if tomorrow the market is still not really as a whole, right, going higher. In that case, August, right, confirm again, right? So repeating the same so-called pattern, right? August fall down. Dr. T, why? Is it, I heard there's what, sell in May and go away. Sell in May and go away is not as frequent. Probably in Singapore could be around 8 or 9 times in the last 12 years. But sell in August, go away, then that could be quite frequent, right? But to be frank, this is not some kind of curse, right? Right. The real fact is this way, because August, right, is the month which the 30 SCI main component stock. So what are main component stock, right? DBS, right, OCBC, UOB. Then we got Singtel and the Wilmar. So these are the top 5 component stock. All these 5, right, pay dividend, right, in a month of August. So there's an ex-dividend effect. So meaning once they pay the dividend in the August, there's a natural correction. The dividend could be between, let's say, 2 to 4%. So last year, the effect is not so severe. That's why last year, August was slightly bullish, partly because the MAS kept the dividend payment for 3 major banks to 60%, right, of earlier year for last year. But starting from this quarter now, okay, so meaning there's no cap to that. So that's why that the seasonally effect on the, especially on the ex dividend, meaning adjusting for the dividend, roughly 2 to 5% will be back to normal again. So unless the market is very bullish, right? Otherwise, for the month of August, to actually to see STI going up will be quite difficult. But if you are truly investing in STI, in fact, all right, you don't need to worry about the month of August may drop by 1 or 2%, because eventually you will cover back through the dividend, right? So in fact, what we worry is on individual stocks, which they do not give dividend, but they are affected by the negative sentiment of the SCI falling down. Yeah, so the true SCI investor, they may not lose money because they collect the dividend in advance, right? But that kind of index performance, right? Because when we look at the prices, right, usually we are not may not pay attention to the dividend effect. We thought, oh, the price simply fall down. Yeah, but actually there is a form of adjustment on dividend. Okay, hope it's clear to you. All right, this phenomenon, in fact, is probably more unique for the Singapore market, because Singapore nowadays is, you see the SCI contribution, the component by this dividend stock are getting more, especially with more REITs, Singapore REITs, right? Singapore REITs right now, I think the contribution is roughly near to 10%, right? At the same time, for non-REITs, right, most of them are paying dividend as well. Yeah, relative to, let's say, Malaysia and this Hong Kong. In Singapore, there are more that kind of dividend stock within the index. Okay, hope it's clear to you. So may not need to worry so much if Singapore, within your expectation, August falling down again. Okay, so medium term is still downtrend, right? More precisely, is actually going a bit sideways. Okay, yeah, so already a few months are going sideways. At the same time, representing in the short term here. Short term, good news, bullish. I cannot say bullish. A right word is called uptrend. Okay, at the same time, within the uptrend for the short term, right, there's a correction here. But to be more technically correct, this is more on the sideways. Usually like 3,000 point plus minus maybe 100, maybe 3,000 to 3,001, 3,001 to 3,002, fluctuating like this. In fact, over the last, you see, the 10 plus years, it has been around this 3,000 lines for very long term. So that's why if SCI one day, assuming can convincingly break 3,001, 3,002, right? Hopefully 3,003, right? That could be, significant appreciation, right? It's like a breakout of this long-term channel over here, right? But at the moment, we are still within that channel at the moment, Okay, so that's why Singapore, right? A better approach is to focusing on individual stock rather than look at STI alone. STI, all right, this is a gift you can buy at this low optimism line. If you miss it, here you need to be more patient if you want STI, or you can consider individual stock with more potential, which is stronger than index. So if your stocks cannot beat the index, then you better buy index. Otherwise, why you take so much risk by non-index stocks, which potentially could be weaker? But if you follow Dr. T, the giant stocks, they are individual stocks, which may not be as big as the SCI components, but at the same time, they could be stronger, although they may not be bigger. Right? Hope it's clear to you. Okay, so yeah, so we wait for SCI to become stronger, right? So breaking 3001 is not difficult. I believe today already broken that. But at the same time, right, you need to actually look for this channel to break out, maybe above 3002 if you are doing short-term trading. Of course, if you're doing long-term investing, right, you may actually want to buy lower. But Dr. T, should I buy higher or buy lower? That's exactly the dilemma or the conflicting between these two teams of players. One is called the long-term players. One is called the short-term players. Long-term players buy low, sell high, or buy low, sell at a fair price. Right? This short-term players we are talking about. Right? Buy at a fair price, go higher, or buy high, sell higher. For example, you can follow some form of momentum or breakout. Right? But right, for short-term, you need to make sure if you enter, you need to put a stop loss. But for long term, right, if you buy even a low here, for example, you buy here, it may fall down. You may not need to put a stop loss. A few reasons. Number one, this one the lowest, right? Although may not be the lowest, it can fall down further. Number two, there may not be a giant, right, for all the portfolio, but in general representing a team of the country players. So even 30 STI, assuming that DBS go bankrupt. Okay, I know that possibility is almost impossible, but almost impossible doesn't mean it's impossible. So that's why we just say for those very conservative investors, assuming they happen, you buy 30 stock, one stock go bankrupt. So at least you got another 29 stocks, right? Also depends on weightage. Yeah, so no need to worry so much, right? Although DBS in fact contribute to roughly 10% of the STI. So if you invest $100, right, assuming DBS totally go bankrupt, then you still got $90 left. Yeah, so yeah, but I'm just quoting a very extreme example to show to you, right? The ability to take action even at here, assuming it fall down by another 20 to 30%, is better than whoever look at it. Wow, luckily I never buy stock. Otherwise I buy it get lower. You see. That's why a lot of people they thought they can buy low. No, you look back, all easy. Buy here, buy here, buy here, buy here. Right? But if you check your own performance, did you buy any stock last year? In fact, here at least got the 3 to 6 months you can buy. Right? If you did not, it means that your personality are not suitable for long-term investing. Because when other people are fearful, you're also fearful. So that requires training. Even you don't know where's the lowest point, you can do an average down. 1,000, 1,000, 1,000, 1,000, 1,000, 1,000, 1,000, 1,000, right? Even if fall down further, 1,000, 1,000. So of course it's easy, Dr. T. This is my money, not your money. You can 1,000 up, down, up, down. Every day I look at the wins, the losses. I could not sleep every night. Yeah, so that's why don't force yourself to become a long-term investor, because you need a portfolio of 10 to 20 giant stock to protect you, minimum an index to protect you, and then you need this optimism to protect you, right? Especially the low optimism here. But if you buy individual stock, you buy low, it may get lower. You buy lower, it may get lower. You buy at 1 cent per share, it may drop to $0. So that's why a common mistake for a long-term investor beginner is actually buy at the historical low, right? If you're focusing on one dimension, which is called the technical analysis, is very risky. So optimism, in fact, is the integration of all the LOFTP I mentioned earlier. It's not just simply some form of channel and up and down, or what the stochastic or the RSI is not that. Yeah, so that's why the understanding of the value versus the this price. Value is what you get and price is what you pay, right? And also extend to the business, understanding the e-commerce mode, why different sectors and the stocks, right, are different. So later on, allow Dr. T to show to you 4 examples, the 4大天王, four heavenly king, to show to you, two US plus two Singapore giant stock. Okay, I could not guarantee buy them for sure to make money, but you know, at least you can consider them, right, in your planning. Although now may not be the best opportunity, right? I would say, if you ask me, the best is always during the crisis here, right? But if you cannot get the last 1 year best, can you consider next 1-2 years of the next best? Don't say here low cannot buy, right? Fair price also cannot buy, and then next time you only have to allow you to buy at a high price. Yeah, so that's why, in fact, investing, especially for long term, is as simple as wait for the durian to fall down, right? Wait for the great Singapore sales to come. Wait for the great Malaysia sales to come from Malaysia stock. Although for the US sales, you know, to drop to the super low could be a bit difficult for US. US is too strong, Yeah, but it also means it's not possible. So that's why when optimism getting higher, right, the whole world, tick tock, there's a time bomb waiting, right? If you stop investing, it keep on going up, right? But once you start investing, the time bomb will start to initiate. It just you don't know when it will actually be ignited. Okay, so there's a balance between stock investing and cash, which is an opportunity fund, how much you need to hold it, right? So that will be more like advanced planning already, Just remember, right? So try to invest in probably, you know, those fund which you can afford to hold, or even take some calculated risk. For example, these are the winter time, could be 6 to 12 months, right? But if you buy low, you are not prepared for that, right? That could be risky because you will see your prices keep on falling down, right? Even you buy at one of the lowest, you still feel frightened. But what if during this period, right, you can buy STI, can pay you minimum 3% dividend yield, or even some individual Singapore stock can pay you around 5 to even 8% dividend yield, while your bank only pay you, for example, now, you know how much is the interest rate right now? Only 0.3%. Assuming the next 2 years is a crisis time, assuming next week it drop all the way to here. So you keep your money 2 years in banks getting 0.3% interest rate, versus you put your money right now in the Singapore bank stocks, which can pay you minimum right now is 3% dividend yield, with MAS waiving this cap of 60% dividend payment. They'll be back to around probably around 4 to 4.5% dividend yield. So even we don't talk about 4 to 5%, just take 3% versus 0.3%. Put your money as cash deposit in bank versus as a bank, this investor. So do you know what's the risk? If you believe bank is risky, so that's why you don't buy bank stocks, I can understand. If you believe bank is risky, why you dare to put your money as cash in bank? Isn't it the same? Bank can go bankrupt, you lose everything in stocks, right? But if you put your money in banks, isn't it your cash also can go to zero? Okay, sorry, to be more politically correct. In Singapore, at least, you can get back $75,000. If you have $1 million cash in banks, right? If the bank go bankrupt, according to the law, right, you're protected by $75,000. But in the world of the stock market, right, your protection could be more, right? Especially your price to book ratio. Look at like OCBC Bank, this 1 year ago, the price to book ratio at here, OCBC was around $8. The price to book ratio was around 0.8, meaning you pay $8 to this OCBC, right? You can get the $10 per share of the asset value, which mostly is a high quality asset. Assuming OCBC go bankrupt, $10, right, going for liquidation, can you get back at least $8, meaning your full investment fund, right? There's a high chance. But that's why many people, in fact, it's not that you don't know the law. It's not that you know what are the good opportunities. It's just when you are in the thunderstorm here, you could not help yourself but to read the news. Okay, we'll look at the Facebook, whether real news or fake news, every day read, right? COVID-19, the subprime crisis, the SARS and Gulf War, right? This Asian financial crisis, right? Here, Other people fearful, you're also fearful. Wow, here you get excited. Year 2000 dot-com bubble, year 207. When other people excited, you're also excited. What you may do? Go in, go in, go in. Get stuck, get stuck, get stuck. Yeah, so, but easy to say when you look back, right? So that's why Dr. T method is actually forward looking. I've been teaching for more than 10 years, right? So that's why from here we can see the psychology of investors and traders. Right? The ancestors, they also greed and fear, right? Your future descendant, your children, grandchildren, right? Future generation, they share the same emotions because we are all human. That's why optimism, although this is one of my Dr. T55 styles, it's a very unique this strategy because it deal with human. Okay, yeah, but we must thank you to the human and normal, this kind of, or can I say normal reaction. That's why providing opportunity to buy low. Otherwise, if everyone wow, like Warren Buffett, I can tell you, it's impossible to buy low. Yeah, because everyone know the do a variation. Only lousy stock you can buy low, right? All the good stock, all going up. Okay, let's move on, right? So that's why every time you hear from Dr. T, the market outlook, you learn something new, right? So don't assume, oh, Dr. T, look at the same chart. No, same chart, you will hear different news story, huh? Okay, let's move on. Okay, so stay tuned to Dr. T, more sharing in future, huh? Okay, let's move on to the short term here, right? Look at individual stock. Hey, Dr. T, both are bulls. So which bull to follow? This is long-term growth investing. This is short-term momentum trading, right? Big bull plus small bull. So we combine long-term and short-term together. So growth, right, could be looking for the business growth, right, and so on. At the same time, momentum could be looking at, wow, there's a stock, know how to chong. You could be buy high, sell higher, for example. Yeah, so by right, these two sometimes could be conflicting. Okay, for example, some growth stock may not be doing well. Look at maybe like Top Glove, used to be strong growth stock and plus good momentum, but guess what? After the pandemic, recovery is getting stronger. People do not like to buy those, healthcare stock like what last time, what MedTech, UZ Healthcare, the glove stock, the Top Glove, Reverse Stone, what Hatalega, and so on. Okay, so this is called the sector rotation. So same thing for the technology stock, huh? Yeah, but it doesn't mean the whole sector or the stock are moving in such a way. But in general, you need to align to the sector as well. So there are 4 stocks Dr. T going to share with you, right, in the next 10-20 minutes. But I want you to focusing on these 4 sectors they belong to. So the first stock is called the Hourglass, which belong to the luxury, right? This product, huh? We call it the consumer discretionary, meaning so Dr. T was a consumer discretionary versus a consumer staples. Consumer staples are those essential ones. For example, during pandemic time, people like to go Sheng, right? Because they need to buy something essential, right, for survival. So that's why Sheng stocks, went up during 1 year ago. Of course, right now Sheng also under correction, right? But the Hourglass, people look at it is like like Rolex, this like those what Philippe Patek, that kind of luxury watches. Okay, so you don't need to own those watches, but you may think, right? So those are not essential. You can live without them. So especially when economy not doing well, right? Their result or sales may not be as good, especially when the economy is bullish. People make money in stock market. People make money in the let's say in the property market. All right, they have got extra money. Take some of the profits to buy those luxury watches, right, to reward them. And the best is actually these watches is not like just for wearing, right? In fact, they could be collector item, right? In fact, you can keep like Rolex, for a few years, a few decades, and you can actually potentially preserve their value, and you can still sell back. Unlike cars you buy immediately on the same day depreciate already. You buy Ferrari, $1 million. After you buy the day, it will drop by let's say 100,000, for example, huh? but the Rolex may not be, for example. Right, but here I just want to quote you one example on our glass. This for long term. I will show you for the short term. So you look at our glass, right? Based on optimism, right? During pandemic is one of the best time. You don't need to buy the lowest. Right? The lowest, I could not remember exactly. Could be around 50+cents, right? So he has been under this long term, this sideways for quite some time. Probably this could be around 60 to 80 cents around here, right? So Dr. T assigned as a homework to my own graduates. I have over near to 4,000 graduates, okay, around 84 cents. Okay, so entering here, the rest is history already, right? From low optimism, nearly hit high optimism here. Right now is under some correction. Now is around 60% optimism. Okay, this rise is around 90%. Dr. T, I wish I go in here. All right, but since I miss it, what can I do? Even at 60% optimism, it's not like super high optimism. Right? Although one time it hit here, right? Here I would say is still near to the fair value. Anything near to the 50% optimism, I call it a fair value. This 60%, I would say moderate high, not extremely high. Okay, but you may consider to change your strategy to short-term momentum. So later I'll look at the next slide to show to you. You miss the 90%, right? Because you worry our glass may go bankrupt. For our glass to go bankrupt, it will be quite difficult. The major shareholder, Henry Tay, right, now passed to the second generation, Michael Tay, his son, right, to continue. Right, so that's why, who knows, in future Michael Tay can pass to the next generation. Yeah, so that's why investing in the stock is like what one of the luxury watchers always say that, right? You are not owning it, you are just helping to keep that so-called watch, right, for the generation. Same thing, you may not be a believer of or supporter of luxury watches, it doesn't matter, right? But right, you may let the fact, let help you to make decision. Right, the business has been growing not for 1-2 years. Even before pandemic, it has been doing well. During pandemic, you're also doing well. Yeah, so that's why even the current interim, this dividend for the H1 2021, right? I think it's paying around 4 cents per share, if I remember correctly, which is equal to the last year whole year combined. And we are not even looking at the end of the year this year. Okay, so but we cannot predict the future, right? But so far you look at performance of our glass, right? You probably say, "Ayo, Dr. T, I missed this last 20 years. 20 years gone up 20 times. This is not 20%. This is 20 times. Going in 1,000, coming out 20,000. Going in 100,000, coming out $2 million. Of course, look back is easy. Do you able to go in here, here? Dr. T, too late already. Why not you tell me when you're here, right? I tell my students, okay? Yeah, so for you, even I tell you now, it's never too late because we are moving to from long term, now go to short term. Short term, one of key differences is the change of strategy. From this cyclical, for example, here, you can buy low, sell high to momentum. Momentum here, this is still uptrend. One of the way to decide momentum is to double check. Does it has a higher high, higher low, right? Currently it's still intact, but it's under correction. Okay, so this slightly outdated by a few days. So later I'll show you next slide with the today latest price. Okay, I have a technical analysis to supplement it. Okay, look at this correction could be a good news, but for trading, you don't purposely buy low, right? You wait some reversal pattern, okay, or we so-called the price action. So right now, although you buy one of the near to fair price over here at 60% optimism in long term, but that at the short term is one of the lower optimism, okay, which I'll say is fine, but you need to follow the short term strategy, right? Especially when you, for example, you enter here, you need to put a stop loss somewhere, okay, before you can actually take profit, yeah. So this is some kind of a short term gain, for example, right? And this short term gain is a lot, like 90%, for example, here to here. But for short-term trader, no one can swallow the whole fish from the lowest to the highest. So sometimes you need to return back, some of profit, especially for confirmation. Okay, yeah. So we call it trend following. So allow Dr. T to teach you about trend following. You may not like so much about the 5% dividend yield or whichever. Right now with the higher price, dividend yield right now I think dropped by to around 2.5 or 3%. Okay, yeah, but for last year, whoever can buy near to the 84 cent, you can get 5% or even more. Right, if they say end of year, right, the dividend is even added more. Okay, so whether you need dividend or not depends on you. For example, you buy 80 plus cent, you are protected by 5% dividend yield, assuming this is still going another 5 years or 10 years, 80 plus cent. Are you okay to collect 5%, or we call it the money printing machine? Every $100 will print $5 money for you. Right? Only difference is this is not a bank. It cannot guarantee. So that's why we need good company who has a good track record of paying dividend. But this is not REIT, right? REIT by law, they need to pay 90% of this taxable income, right, to this shareholder in the form of dividend. But not necessarily REIT are good. There are some young REIT. Look at the Eagle Trust, can go bankrupt after less than 1 year IPO, right? So that's why even Hourglass is not a REIT, right? It can be better than the normal REIT. Normal REIT, you want to get even 5% dividend yield also may not be easy, huh? Okay, anyway, we continue, right? Looking at the current prices, I plot using today, this 30th of August. Of course, as Dr. T say, stock market in the short term, especially daily here, these are the voting machine. Stock market in the long term, this is called weighing machine. Do we need a weighing machine, especially which is determined more by business and also by this so-called the fundamental, the economic mode and so on? Or do you want to determine by this up and down emotion, right? So probably sometimes there could be some bad news or market bring some this wrong direction. Let's say maybe Biden in trouble, okay, or someone important, or let's say maybe Hourglass, there's some kind of a corporate news, right, which is not favorable, and it could fall down, probably 5% or even 10%. That's possible. So that's why as a trader, we cannot predict that kind of day-to-day action. So one simple way is you can look at, this is called this daily price action. So 10, 20, and 50 days moving averages. Right, you need to make sure this 50 days, right, if you want to do trading, right, at least it's trending up. And you wait for the price, for example, to drop below this 20 days, or you can choose 10 days, doesn't matter, right? But don't buy first. That once it cross, for example, 10 or 20 days, okay, only then, all right, you go in, right? For example, this could be 10 days, go below that, and then when it cross over here, you enter here, right, and the stop loss here. Okay, so probably let me draw it. There could be a few ways. Let me show you a few systems. Firstly, you can use the 20 days, for example. You let the price, okay, here may not be so clear cut. For example, the price drop below the 20 days, which is the green line. We make sure this 50 days dropping up. When the price drop below this green line or 20 days, you cancel a vacation. Right, once it cross upward here, you E for entry and put a S for stop loss. Okay, usually entry to stop loss here could be a few percent. So this is called your risk. Okay, and then your reward, you can put we call it the conditional reward, meaning you want to use like 1 to 2 is fine. Risk to reward ratio 1 to 2. For example, 5% to 10%, or $1 to $2, that kind of thing. I'm okay with that. Or another way, we call it conditional exit, meaning you let it go. So one day, if you are using 10 days to go in, then you use 10 days to get out. For example, here, right? Or you use the 20 days, which is the upper slides here, right, above it, right, to actually get out when the price cross the green line. Is it clear? Or you can actually use another way, right? You can use, for example, right, 10 days cross the 20 days. Okay, for example, here, when the red line crossing the green, and then when again on the top here, when this red line cross the green downward, you get out. Okay, but this is called the SCT, stop loss entry and take profit. Dr. T cannot. I can only enter and then make money. My dictionary, there's no word called losing money. No, I cannot stop loss. In that case, please do not do anything on short-term momentum trading. Do not do anything on short-term. Short-term is attractive. Okay, Dr. T, wow, 4 months. Just now show, wow, 80%, 4 months get 90%. Yes, but what if you go in without a stop loss? You can, probably 1 month drop by 20%. Is it possible? Yes, it could. Okay, so let me clear all this, right? I just want to show to you how to position here currently. This is called sideways, right? You may planning at least for the price, probably can draw some kind of a support over here. Probably let it break above 1.5. Dr. T, I don't get it. You say at 1.5 or higher to go in. Now 1.43, isn't it lower? I thought buy low, sell high to make money. How come buy high to make money? This is called trading. Because you buy low here, you may get lower. You buy for example here. You buy, for example, here 1.45, it may drop to 1.4. You buy 1.43, it may drop to, let's say, 1.3. I'm not saying you would, but we don't know because it's called short-term action. Right? No one in the world can predict short-term action. Okay, but we use, for example, a 50 days, that kind of trend to show to you. But even 50 days, this is never 100% winning rate. Okay, so that's why you need, we call it momentum. For example, use a price breakout momentum, break out some form of resistance. So that's why you buy slightly high, although you may not need to buy the highest. Some even wait for the price to break like 1.6 to go in. In that case, your risk will be more, unless you put your stop loss, lower. Okay, for example, you enter 1.5 here, then you can put your stop loss near to the intermediate low here. This could be around 1.4 if you want to, Yeah, 1.5 above entry, stop loss 1.4. Agak-agak, that is maybe I think should be around 7% stop loss roughly. I think that's still reasonable, right? Although some requiring more uptrend, right, to go in. Yeah, so this is still not perfect because the hourglass, the momentum indeed slightly weaker, right? You see there's a lower high here for very, very short term. Although there's still a so-called higher high in the medium term, but this also slight higher high. But technically this is a bit close to mild bullish. So that's why this hourglass still got momentum, but I'll say half momentum. At least it's not bearish, right? So you need weaker trend to actually support this stock, right? If you think this is not your cup of tea, let's move on to the next Singapore stock. Okay, let's look at Tianjin Zhongxin. This is belong, again, we need to link this stock to the sector level 2, right? Like just now, this hourglass we link to the luxury, this consumer stock, right? So this is pharmaceutical. But pharmaceutical, there are 2 types. One is pandemic affected, one is pandemic beneficial. Okay, to be frank, those pandemic beneficial one, like related to glove stock, for example, like those personal that kind of protection system, right? Those actually in the last 1 year was doing well, right? Tianjin Zhongxin, in fact, during the pandemic time, may not be as strong, okay, all right, but it still has a recovery. But business has been doing well even before, after pandemic. So that's why this stock has been quite consistent in terms of the business growth. So that's why in the long term, it's actually a good growth stock. But this stock is very cyclical. All right, this stock has a dual listing, 1/3 in Singapore, and 2/3 is actually in Shanghai, right? So in fact, this stock in Singapore is around 30%, right, behind this Singapore, the US, not US, the Shanghai counterpart. Yeah, Shanghai one, in fact, is much more bullish. The absolute price even probably 2-3 times higher than this Tianjin Zhongxin. Okay, Optimism even higher. Optimism for Tianjin Zhongxin Singapore here is around 48%. This is T14, right? The ticker, right? But the Shanghai side Optimism could be around 50 plus or even 60%. I have not looked at it. So there's a lagging effect because the China side follow the country of the China. Right? We call level 3, like the Shanghai stock market. Right? But our level 3 in Singapore, right? If you look at it like blessing in disguise, lagging. Singapore always like run. Come to the 30,000 points, I cannot run anymore for SCI. So the rest of stock may also be affected by this sentiment. So this could be maybe around, I think it's quite comparable with just now the hourglass. You see, hourglass probably around like, also around 60 to 80 cents here. You see, go up to 1.59. This one is around probably could be, I cannot remember, maybe around 50, 60 cents also. Right now it's go to 1.3. Okay, this gone up by 50%. So this optimism is even more affordable. Right now is around near to even slightly below the fair value. Yeah, 48% optimism. So this within 7 months. So this stock I discussed with my students right in January time. So at time still remember it was around 80 plus cent. Right, 80 plus cent. The major shareholder right actually changing hands. Right, which owns 2/3 of Tianjin Zhongxin in Shanghai, right? So they changing hands. So according to law, they must, provide a mandatory so-called offer. But the offer not so sincere lah. They just give like a few percent higher. Normally, you want to offer at least you give extra 20% higher. So at the end, as expected, the acquisition did not get through. Right? In fact, in Singapore, I think as a whole, less than 1% shareholder want to sell. So at the end, in fact, they also don't want to sell. They also want to acquire. But just because of law, they have to do that. Yeah, so that's why when we discuss, we know that's one of the best opportunity. Of course, you can do nothing if you want to, or you can wait until you break like $1 to go in. It's also never too late. Right? But remember, at the time, Tianjin Zhongxin also give 5% dividend yield. So that's why you see Tianjin Zhongxin, although different sectors, a lot of similarity to that, right? Going sideways for a long time, not people looking at it, and the people don't know what to do. Right? At the same time, business has been growing, right? Even not affected by pandemic. So this is we call it TCM, traditional Chinese medicine, which is roughly 75% of this business. Then it got Western medicine as well, which is around maybe 25%. Yeah, a lot of patents, close to 100 patents. So this is not like what the secret recipe kind of thing, not proven. This one, got the scientific background behind it. Yeah, so this stock is actually we call it more like a modern Chinese medicine. Okay, so Dr. T, this is not important. Important, can it go up or not? Right, no one knows. Right, but you look at optimism. At here, you dare not buy. When they at here fair price, then you ask me. I will say at least you buy fair price, not expensive, not cheap. Right? Don't wait until one day. If you have chance to come to here, then you ask me, Dr. T can buy, then I cannot answer. Here you buy high, you also can buy, sell higher, still can make money. But probability of winning in long term, right? Especially if you cannot hold for lifetime, then will be limited. You see, Tianjin Zhongxin, you buy high also can lose money. This could be quite significant. You can drop by half, right? So this portion here. So that's why if you buy very good stock at the wrong price or wrong optimism, right, you can still suffering. Although you can collect good dividend and so on, right, but you could be disappointed. Yeah. So what differentiate between a smart investor versus a normal investor? Normal investor just follow tips, follow other people. Oh, good business, can buy one, just buy, get stuck. Other people are greedy, also greedy. Yeah, so sometimes if you could, you must know when not to buy. Sometimes you may know when to buy, for example, below the intrinsic value. Although 48% here, discount here, I would agree, not much, right? But at least from here, right? Even you say, Dr. T, I'm so sorry, I missed a 50% rally here. I'm so envy of your graduates. No, you don't have to envy them. They also take calculated risk. At the same time, you see the stock similar to this just now, the hourglass. Hourglass in the last 20 years gone up 20 times, right? For Tianjin Zhongxin, right, in the last not only 20 years, this is last 11 years gone up 20 times, right? But Of course, right? Look back, everything is easy, right? So that's why don't tell me, Dr. T, one day I will use your optimism to let it drop to here or go in. If last year you cannot go in, don't tell me 5 or 10 years later you go in. I may not believe, because that requires training. You need training to overcome your biggest enemy. This training is not just listen to Warren Buffett, not listen to Dr. T. Hey, you're using your hard-earned money there, right? Are you sure you put in your 1,000, 10,000, 100,000 or 1 million here? Right? Isn't it here you buy, you may think, wow, maybe Dr. T will drop to all the way to zero. Maybe the whole company may disappear, right? Especially this called S-chip, right? S-chip meaning China business get listed in Singapore, right? You know, Singaporean not very, probably I think due to the past 5 to 10 years, especially on some penny stock. If technically at one time this was also qualify as a penny stock lah. Now of course no longer penny stock. Okay, more than $1 no longer penny stock. So that's why people still have a bad impression on number one. See China word Zhong, think China must be questionable. Then see what penny stock, wow, and then see what share price fall down. Wow, this one definitely cannot buy one like that. You know, you buy low, later get lower. This one called commit suicide. Yeah, that's why when people are fearful, right, this is a good time. But don't simply just because a share price drop to historical low or the lowest point to go and buy. That one not really a good investing. So you need to understand the economy mode, understand about Tianjin Zhongxin business, knowing about how it can protect, you know, the company to grow with or without pandemic. Okay, some of the company, right, they use pandemic to make money. That's why after pandemic people worry, right, can you make money or not later on? So that's why Tianjin Zhongxin, right, it's just during pandemic make more money. After pandemic will continue at least make normal money. Yeah, so that's why this kind of stability, right, assure. And the best thing right now, there's a momentum. So we can combine the best of investing with trading. Let's move on to the momentum. All right, look at the last few months here. Look at Tianjin Zhongxin. Wow, momentum very strong. All right, this is a bit different with just now the short term for hourglass. Hourglass under correction. This momentum is still strong. Okay. Later we look at the current one. This, if you use a 1.3, okay, as Dr. Lee mentioned, this one has gone up 50%. So that's why who say short term, you know, when you make little money, you know, short term, you know, even this is a alignment, or we call a conference between short term and long term. You see, yeah, you no need to buy and hold for 10 years, but you need to buy at the right time, the best year of the decade. Then you can get this one within months, right? But even you miss it, right, although no one can guarantee you can get another 50%, but here is a strong momentum at the moment, right? Yeah, whether you buy the fair price, sell higher, but at the moment you could have two strategy. And here I want to go in, possible, but that even lower, right? Not lower, meaning even shorter term kind of strategy. You're using breakout, meaning you have to even go higher. Okay, later we'll see whether it potentially can go higher. We call it buy high, sell higher. Or another way, you wait for this to correct down. Okay, let it rest for a while before you go in. Okay, so allow us to move on to the today price. Today meaning at the point of video taking, right, on the 30th of August here. Right, feel free to rewind the video, right, if you watch it, so that you can learn it, understand the nature of the stock market prices here. You see, no one will know tomorrow what will be the prices, right? For example, this Tianjin Zhongxin, all right, let's apply Dr. T's simple criteria here. All right, look at here. All right, firstly, Dr. T, just now you said the short term again, what's the criteria? Number one, look at 50 days trending up. This is a daily so-called moving averages. Right, you can wait for the price to drop either below 10 or 20 days. Right, and for example, if you use like a green line here, 20 days, right, whenever you drop below 10 or 20 days, the red line or the green line, you cancel vacation. When you cross whether the green or the red line, you E for entry. Okay, and put a last low here, S for stop loss. Right, and then you can take profit here for the 10 days, or you can take profit here if you are using 20 days. There are some differences, but I'll say both are acceptable. For example, if you use around here, likely you sell around here. Okay, this is the first move. Right, so let's say your entry around here, your stop loss around here. Okay, so that could be agak-agak maybe around 5 cents. Okay, this one agak-agak maybe, you know, nearly maybe 8 cents. Okay, I'll say still okay. Risk to reward ratio about 1 to 1.5. Okay, but you are not able to swallow the whole fish. Whole fish meaning from the lowest until the highest. Okay, no one can do that. Huh? Yeah, so trend following, you need to return back a little bit to the market. Okay, so this is called get payment by installment. For example, you follow the green line here. This is the first installment. Right, after that you cancel vacation. When the price drop below the green line, you go in again. This is a second entry. So this is when it below, not yet, you see, until today, or maybe it didn't slightly, but didn't touch it. You see, until today, the price has not so-called cut this green line. So you enter here until today, this is still holding. So this is so-called the second E for entry, E2. And this is a second S for stop loss. And now it's still conditional exit, not yet, but you're preparing. If you never hit, you continue hold. So right now, for example, today is 1.28. So when it may hit, assuming maybe tomorrow this green line continue go up, maybe come to 1.25. Right? If it cross 1.25, you get out. Right? If within 1 day it drop like 10%, assuming, then you still need to get out. Okay, yeah, unless you follow through, you put some this special order, right? When the price drop to a certain number, you get out. Otherwise, we call it the conditional exit. Okay, hope it's clear for you. There are many ways. You can also, for example, using 10 days to cross a 20 days, right? Multiple method. The key is consistency as forming a system. So even moving averages is one of the easiest way. Right, some maybe you were using what the MACD, using stochastic, RSI, Fibonacci retracement, blah blah blah. You know, all kinds of price action. Nothing wrong. Okay, all your so-called secret method, but at the end you're still doing the same thing. A system of entry, stop loss, and take profit. If you don't have a consistent system, sometimes make money, sometimes lose money. That one called luck. Huh? Yeah, so that's why I'll say sometimes there's a similarity between momentum trading and long-term investing, right? Because they have a certain momentum, right? But at the same time, right, your risk tolerance level could be different. For example, this one up down, wow, this one could be tremendous, like 50% up and down. But this one could be, for example, like 5% drawdown or pullback. Yeah, so that's why if you want to enter again, Dr. T, I wish you enter, for example, this one, you see, drop below 10 days. You E for entry. If you cannot drop below 20 days, you at least let it drop below the 10 days. Here, entry point, here, entry point, multiple. Yeah, but right now, it has not come to that. Huh? Yeah, so of course, you can use a breakout strategy to let it break 1.3 to go in. And then if it drop below the so-called breakout, we call it a false breakout, then you get out. But some of you may feel very stressful. Dr. T, buy, sell. I cannot concentrate. I cannot work. I cannot sleep. I so worry about my Tianjin Zhongxin later on fall down all the way. You know how? Yeah. So that's why know your personality is most important. LOFTP. Remember, levels, optimism, fundamental, technical, and personality. All right. LOFTP. The most important is the personality. Are you a long-term investor or short-term trader? LOFTP. The next one is technical analysis. Do you see a low, higher high? Okay. Yeah. So that is more important. LOFTP. The F, fundamental. Is your business growing? Do you have a strong economic mode? Are you in a promising sector? Is a pandemic beneficial to Tianjin Zhongxin? LOFTP. Right. Do you have a lower optimism? Right. Do you have a pullback? Right. Retracement with a reversal, for example. Huh? LOFTP. LL. Is your country protecting you? Is your China bullish, protecting your counterpart in Shanghai, which indirectly protecting your wanted in the Tianjin Zhongxin in Singapore? Is your SCI okay? Right? Is your other, do you have other investor or trader who support you to buy high, sell higher? Yeah, so you may not need to be the smartest person, but you can not be so-called the dumbest person. Understand? So it means if there are 100 investors or traders, at least you need to be the 50% or better, the smarter one. Okay, don't become the so-called 10% of that. But you cannot tell say the 10% this one is the so-called the dummy one, no, because they probably very short-term one who know they are intraday traders. You cannot say they are wrong, huh? Yeah, so that's why they are trend within trend within trends, right? So the personality could be sometimes determined, for example, the time frames of your interest, right? Can you use a lifetime to do investing? Buy and hold for lifetime. At least you can hold for looking for 10 years, right? Roughly market cycle of 5 to 10 years, looking for the best of that market cycle. No need to buy, sell every few weeks or few months, right? Can you press a button every 10 plus years as if buying property? You cannot buy property every day, right? Probably every 10 to 20 years, you got money you buy, right? You see, probably you buy, take action every 10 years, buy, sell, buy, to know here could be better than buy, sell, you know. Yeah, so there's no right or wrong. And remember, this trend not forever. One day, for example, this 50 days may be trending down. They must know when not to buy Tianjin Zhongxin, for example. Okay, so don't tell me, you know, you don't know about trading, Dr. T. I don't know about momentum trading. I don't know about optimism. Right? Although you can learn further from Dr. T in more details in future. True, you may not heard about optimism, but you may heard about moving averages. But if you apply moving average in wrong way, you could buy, sell, break even is still lucky. Sometimes if you apply wrongly, you can make more losses, right? Using moving average crossover. Possible. You buy high, sell low, isn't it losing money? Yeah. So, and the worst thing is when that happens, you don't follow, and you buy aiming for, let's say, 10% gain. At the end, that can suffer. For example, like here, maybe you follow some moving averages, want to go in to get maybe 10% gain. Later on, you may suffer going in as a short-term trader and get out as a long-term investor. Who knows, you can suffer a 50% loss. 50% loss is no joke. We are talking about your investment 10,000 can become 5,000. Although you wish your 10,000 become extra 1,000 here. So that's why some people confuse themselves between investing and trading. Although here, in fact, you can have the best of two worlds. For example, around here, integrating investing and trading together, which you know, my graduates, all right, could do that because they master the best of the two worlds. In fact, it's not a must for you to integrate both. You can purely focusing on trading. You could purely focusing on investing because sometimes their signals may not be aligned. It's possible, for example, you buy low, you may get still at low. For example, just a quick example like Hong Kong land. Hong Kong land, you buy maybe $5, it may drop 450. You buy 450, Hong Kong land drop to $4, and during pandemic it dropped to maybe 350. And then you stop buying, it can go up to $4. You stop buying, go to $5. And then you want to buy again, Hong Kong land again drop to, like recently dropped to like $4.20. Right? Why? That's another story lah, related to Jardine Group. Hong Kong land, Jardine second carriage, this dairy farm, Jardine Medicine Holding. That's a level 2, the sector of the Jardine Group. Yeah, then the Hong Kong land, you must understand another sector already, property sector. Do you know about the Hong Kong property? You may not know. So that's why I'm a bit worried for some of you. You thought investing and trading so simple. Just follow some maybe YouTube of some, you know, other speakers, for example, who will apply one factor, either one factor on trading, right? They're using some of the secret method to tell you, you know, what that one can buy, right? You see, blindly follow, sometimes lucky, make money, sometimes unlucky, right? So you just tell yourself it's luck. No, it's not luck. This is called competitive advantage, LOFTP, right? Although you may not know the gist of it. Dr. T got 55 styles, LOFTP just 5 of the styles, right? I cannot say this cover everything, but this is my past over 20 years experience. These are one of the most important 5 factors, okay? Right, covering fundamental, technical, across the different sectors, the levels, right? Your own mind, your emotions, right? Plus, you know, like the technical of it, right? So anyway, read further and rewind the video, right? If you don't understand, right? Today, in fact, I plan to talk about only 1 hour, but seems like I talk a bit long, which is fine. Okay, treat that as a bonus to you. right? Especially congratulations to whoever can listen to now instead of you fast forward. Fast forward is very simple lah, you know, from beginning to end. You can finish my whole, who knows, over one and a half hour video within, you know, 1 minute. But if you can listen to my every word I say, I can tell you, you're one of the sincere learner. So I wish, you know, you can actually invest in yourself. When you're investing in yourself, meaning your own knowledge, no one can tax you, no one can take away from you, right? Because your knowledge is yourself. Okay, so feel free to learn from Dr. T, a lot of free knowledge. Right, I got a lot of free articles which are available. Over a few hundred articles written in the last 1 and 2 years during pandemic time. Go and read it. Some is we call it timeless. Timeless is like unlike like here, up down. Okay, timeless meaning that principle true across, you know, different time frame. For example, like LOFTP, right? Although we may not be able to predict whether the next day will be up or down, so we call conditional entry or exit, especially for trading. There's a plan, huh? Hope it's clear to you, right? And for Tianjin Zhongxin, right, as Dr. T mentioned, right, either a weak breakout entry, right, breakout, false breakout to get out, or wait for the next retracement below 10 or 20 days, moving averages, cancel vacation, protected by 50 days training up, but going in only when they go upward, and always put a SCT, entry, stop loss, and take profit. You see, I remind again and again, right? Kind of like a worrying you may forget all these terms. You listen one time, you may forget, but listen 2, 3, 4, 5 times, then you finally understand why Dr. T keep on iterating that concept. Even you may listen to my talk for the first time. I sincerely wish you know, you learn the right way of whether short-term trading or the longer-term investing. All these are the necessary skill in order. Although I cannot say 100% winning rate, no, there's no such thing as that. Right? We call it the edge, meaning edge in the trading or edge in investing. So an edge can only be useful when you align to your personality. For example, you're a long-term investor, you're buy trading, it may not work for you, or vice versa. Trader who actually buy low, you may get lower. For example, trader, for example, buy here or available, you may get lower, for example. But there are times you can integrate investing to trading. You can integrate trading to investing. If you can understand the complete LOFTP, even you cannot master Dr. T complete 55 styles of it. Okay, let's move on to the other two example in USA. BlackRock. This is now promoted to become the Temasek stock. Temasek has roughly 30 to 40 stock globally, and they are this position in the USA. Number 1 is BlackRock. Only number 2 is Baba, Alibaba. In fact, Temasek has sell down quite a lot on the Baba due to the, you know, the Tencent Baba correction, right, in the Hong Kong tech stock. So right now, BlackRock is one of the highest, right, in their holding, right? But in fact, you know, Temasek entering probably not long ago only, Yeah, so in fact, Dr. T assigned this homework as to my own student even earlier than Temasek. So that time was around $504. Even before pandemic, you don't need to buy the lowest here. Because if you ask my student to wait every 10 years to buy stock, some probably may feel, oh, Dr. T, I cannot wait too long. Okay, so that's why from time to time, I assign homework to my students. Yeah, so I remember there was a July 2018, definitely before pandemic. I think that's somewhere here, near to the fair value. Even if someone buy at the fair value, you see, you don't need to buy the lowest here. Ideally, of course, you can buy here, but in year 2018, how will you know there'll be one black swan called COVID-19? Although according to Dr. T principle here, buy, sell, right? Naturally, you may think there'll be one low here, but you're at here. Even you're someone you're investing, you buy here, assuming COVID-19 you do sell. Guess what? It come back again. Right here, I cannot remember. Here could be around maybe $300 to $400. Right? You can go and find out the lowest in pandemic time. You don't need to buy the lowest, but you just need to buy at a fair price, or even at the green line here, good enough. So that will be around $500 or so, right? You see, at here, even you buy, no need to sell, and guess what? After 2 years later, this is 954. In fact, the moment right now, Dr. T taking this video, right? This BlackRock even tonight is going up. Why? Because stock market, right, short term is a voting machine. I also don't know whether tonight will be up and down, but I just now, at least during opening, right, for the Monday, which is 30th of August, right, USA got a time difference, roughly 12 to 13 hours. Okay, so anyway, conclusion, this is still a mid optimism, quite comparable with the hourglass, but this is different sector. This is a giant bank. Okay, although this is not JP Morgan, not your UOB or DBS, but they have the similar kind of behavior. Number one, they are sensitive to interest rate. Even interest rate drop to 0%, they still in USA, all right, they still make money. So under the worst time for bank sector, giant banks still make money, but they are lousy or junk banks. Okay, not necessarily the biggest bank is good. Look at the Hong Kong largest bank, HSBC Bank. HSBC Bank, even the last 1 year, right, having issue to pay dividend. Of course, not their issue, it's the partly their issue, partly due to the UK government, because HSBC Bank belong to UK, right, but listed in the also in the Hong Kong. So they want to actually limit their dividend payment. So that's why. But even before pandemic, HSBC also not doing so well. But BlackRock, how powerful? This is 3 times bigger than the world biggest bank, ICBC. This is the world biggest fund. Technically, it's not really a bank, to be more technically correct. But we can call it the banking financial stock. Still, right, possible within this big umbrella, although I cannot say it's a bank, right, to be technically correct. Right, but even the Donald Trump, right, the former U.S. president, when he want to print money last year, I still need to consult or at least review with the CEO of this BlackRock. Yeah, so you can see this how powerful is this BlackRock. Right, in fact, BlackRock started to become very powerful during subprime crisis. In fact, they acquired many negative asset during the subprime crisis, become bigger and stronger and stronger and stronger. Okay, you see the market no need to buy the lowest here. You see this may not even IPO time, but just look at the last 20 years. The last 20 years, the share price even better than the just now the Tianjin Zhongxin and this hourglass. Tianjin Zhongxin hourglass, the last 20 years gone up by 20 times. This one gone up by 70 times. What meaning of 70? Is it 70%? No, 70 times. 1,000 go in, 70,000 come out. 100,000 go in, 7 millions come out. But you must have the power to hold for 20 years, right? Do you have a faith to hold and can overcome this kind of pullback? This pullback could be dropping 50%. Every 10 years or so, there'll be a one global financial crisis like what Dr. T Optimism show you, right? So although this actually, if you buy even a high here, you may not need to actually worry, right? Because it's a growth stock. Even pandemic fall down here, you're still okay. So that's why sometimes you may need to buy low, sell high. But there are certain stock you can buy low. Technically, you want to hold for lifetime possible. But every year you need to apply Dr. T, right, the giant criteria to make sure every year is BlackRock still a giant, next year is still a giant. Because it's possible even a giant stock may become a non-giant one day. I look at like Noble Group. Noble Group many years ago was a 30 SCI component. It was a giant stock before, a commodity giant stock. After the iceberg or muddy water, you see, attack this Noble Group. The difference of Noble Group and Olam, probably one is a Temasek stock, Olam, one is not. You see, Olam, remember many years ago, right? Attacked by this muddy water. Temasek come in to support, but Noble Group, right? The sponsor not so strong. I think there's one fund from China, cannot protect. Yeah, so that's why. Although I cannot tell you Temasek stock must be good, you see, did Temasek protect Alibaba? No lah, right? So it's purely for investing. So that's when Baba not doing so well due to political economy in China side. So still need to cut down on that, right, to reduce the risk. Right? Although the possibility of Alibaba go bankrupt or Tencent go bankrupt is quite minimum. Yeah. So but Temasek representing sovereign fund. Okay, can remember, is it like 300 to 400 billions kind of a worth of it? GIC is a similar kind of seal. So that's why GIC and Temasek both representing the top 10 this sovereign funds in the world. So of course, with those fund protecting is good. That's why Temasek investing is more than 50% of the DBS and Singtel. So that's why these two stocks, right? If you think Temasek behind will be quite all right, but it doesn't mean for other stocks Temasek will protect them. So I'll rather thinking these are the stock giving, for example, Temasek that kind of edge, right? You know, in the last few months, right, Temasek, right, reporting the asset value is one of the highest in the history so far now. Right? I believe one of the key so-called supporter will be BlackRock. So I cannot remember the exact average price they go in, assuming Temasek entering around $600 or $700, or even the average up to go in, it doesn't matter. So even they could not get 90%, can it get 50%? Hey, we're talking about sovereign fund, right? And that's one of their biggest this portfolio. At least within the US portfolio is the largest, right? Even more than the BABA. Yeah, may not be more than the DBS, right, of the Temasek portfolio. Right. Of course, they can reduce a portfolio over the time. But what I'm saying is even Temasek, right, also know how to invest in growth stock. Right. So that's why for you, right, although you may not have a 300 or 400 billions kind of money, but it's scalable. You probably have sorry, $300 cannot buy. In USA, you need minimum so-called 1 unit. So this is 929. Tonight, I think it's more than 954. 954 is the last Friday price. So assuming lah, okay, assuming $960. Okay, and you convert to US dollar to Sing dollar, you need to times roughly, let's say 1.35. So you need roughly $1,300. Right, so you got $1,300, you can buy 1 unit of it. But Dr. T already gone up 90%, I think expensive already. You see, low cannot buy. At the fair price, also think high. Why? You're always relative to the lowest. I can tell you, if you cannot buy the lowest, don't think it's high. At least fight for the fair value. Although I will agree it's slightly moderate high. But eventually, even the worst case, you buy the highest optimism here. This 100% optimism. But this is a compounding. Even you buy at the highest optimism, yes, you suffer, who knows, here could be 40, 50% loss. Right? You see, after a few years later, you become a winner again. Although you take roughly maybe 2 to 3 years to recover, right? But some stock, if you're wrong, you may take maybe, you see, Tianjin Zhongxin, if you're wrong, you buy at the highest optimism, you may need to wait. In fact, at here you still cannot break even yet. But if you add the dividend, I think can recover already. Maybe this is roughly like 6 years, right? Maybe hourglass, okay, hourglass in year, yeah, same thing. You also need roughly 5 to 6 years to recover. Yeah, so that's why optimism, right, for certain stock has a stronger effect. But for this kind of BlackRock, I would say optimism relatively, I'll say it's good to have, but may not as critical. So that's why I personally think Temasek make the right decision, right? Although at one time Temasek may sell everything on BlackRock one day, who knows? Yeah, because Temasek, I believe they have their own way to evaluate, for example, fundamental of BlackRock. Right? Although they don't follow Dr. T so-called the giant criteria, but there's alignment, right? Oh, by the way, a giant not necessarily follow fundamental alone, right? So in fact, Dr. T, the giant criteria is much more complicated than that. Okay, anyway, now we continue. Say goodbye to 70 times. Say goodbye to 90% gains, right? And by the way, BlackRock also give you minimum 2% dividend yield, although there's a 30% withholding tax in this US. So that's why usually US we don't position for dividend, but for the growth, for the compounding. Okay, yeah. So the compound interest. This is the 8 wonders of the world. That's what Einstein say. Dr. T. Either, Albert Einstein. Okay, so that's why you can integrate science into trading investing. Okay, science is not just based on the prices. So this is a short term of it, a strong momentum stock. Even in the last few weeks, this is could be a potential good entry. Right, this is a good uptrend signal from low optimism. Right, going higher, there's a higher low. Also, there's a higher high. Although tonight, I think likely optimism for short term, I could be approaching a fair value of it. Yeah, so that's why short term nearly fair value, long term also nearly a fair value. Yeah, so that's why this BlackRock, it's not just a favorite, by a niche group of investor traders. This is in fact one of the well-known giants. Even this is more famous than your DBS. Some people, right, in the world, or can say most people in the world may not know who is DBS, may not know who is OCBC. But I believe there are more people know about BlackRock than your DBS. Yeah. So, but again, don't wait until it's too popular when you go in. So you miss the time when people are fearful. This winter time, at least right now is a springtime. Don't go in when it's a summertime. Okay, hope it's clear enough for you already. So Dr. T, I assuming we integrate technical analysis, what could we do? Okay, in fact, 5 months ago, I review with my student. Beside the 2 years ago, you see, I review from time to time. For example, 2 years ago, this 90% gain, assuming the late comers or the graduates who join Dr. T later. So 5 months ago, instead of 2 years, 5 months ago, there's other entry point here. For example, around $700 plus. That could be the time, who knows, the market may enter around 600, 700. You can do some Google to know when the market enter. Right, you see, so even at all this potential entry point, right, you may go in further, right? Or even we can apply a simple this like not optimism but technical analysis, okay, to go in here. So number one, 50 days trading up. Today still trading up. Then when the price drop below 10 or 20 days, right? So allow me to draw the entry point for you to see. So you see, follow this nearly the easiest method in technical analysis. Okay, so for example, if you use the price with the so-called green line, first installment. You see, whenever the price drop below the green line, you cancel vacation. When you cross upward, then to potentially, right, E for entry, and put the last low here as a stop loss. Okay, and then same thing after you take profit here, you cancel vacation and then you go in again over here, E for entry one more time, and put a stop loss here. Okay, and then when you come to here, because it's kind of like going sideways, so this so-called moving averages, right, then you need to be careful. When it goes sideways, you wait for a breakout. Yeah, so right now there's a new trend forming already. So again, 50 days trending up. You see, there's a signal dropping here to 20 days. Again, you can apply E for entry, right? Although your stop loss could be a bit tight over here. Right, whether follow 10 or 20 days. So as of today, right, it's still a holding. Okay, so if you miss it, right, you could wait for the pullback, right, back to 10 or 20 days, but make sure your momentum never lose. You make sure your high become higher, your low become low, so-called higher as well. Higher low, higher high. So that's a very basic of technical analysis if you do know what's training. Of course, there are certain stock like just now, because this stock only got 2% dividend yield, especially if you pay 30% withholding tax, only left probably 1.3%. But if you look at the Tianjin Zhongxin, you still need to pay 10% withholding tax to China government. So, but still get at least 4% dividend yield. And Hourglass, you get 5%. So that's why for those stock with 3% or 5% dividend yield, it's possible for you to apply. We call it average down strategy. Average down meaning here could be 1,000, 1,000, 1,000, 1,000, 1,000, 1,000. Assuming you buy here, of course, it don't give you a chance to average down. Right, same thing for Hourglass in the long term here. Even you buy here, 1,000, you drop further. Every 10% you drop, you 1,000. Go up 10%, you 1,000, 1,000. Right, finish the story. So you see, by the way, this is not called dollar cost averaging. Dollar cost averaging means 1,000, 1,000. You buy all the way there. So at the end, your pocket not so deep. Okay, although I'll say that's not wrong. So I'll say you average down when optimism is lower than the green line, which is 25% optimism. Huh? Yeah, but if you have no patience, at least you buy or average down below the this yellow line, which is the intrinsic value. Next time when you master from Dr. T the intrinsic value here, you can actually have a way, know when to enter. Huh? Same thing for Tnt Toxin. This is a time you can invest. Although for trading, even above the high optimism, you can go in again, huh, if you want to. Okay, back to the BlackRock, back to here. Okay, so that's why USA is more bullish, aligned to the level 3, which is a S&P. Okay, so S&P exceeding 4,500 points in the last 1-2 weeks, almost reaching a new high again. So the level 3 protecting the level 1 individual stock. And the banking finance stocks, I think in general quite okay. Although bank stocks in the last 6 months kind of like a bit sideways, but in the last few months in general okay. So that's why this kind of representing the US banking finance stock performance. Even this also kind of like aligned with your DBS or UOB. Okay, yeah, because bank stock also sensitive like to the bond yield, right? Treasury bond yield, sensitive to the interest rate, sensitive to the Federal Reserve, what Jerome Powell, right, going to say, right? The Federal Reserve chairman, right? For example, last Friday with this Jackson Hole meeting, right? After that, people say, wow, this Jerome Powell say, I think economy is still good, but we are not in a hurry. Want to increase the so-called interest rate. Okay, by right, interest rate go up is beneficial to bank stock. Although interest rate not going up, you can say not good for bank stock, but at least it's good for level 3. Okay, level 3 means entire the rest of the non-bank stock. So that's why there's a mixed effect here and there. So sometimes you cannot just say using one factor to analyze. So sometimes you see those traditional analysts, those who study economy, they like to use some fundamental economy to tell, oh, every time they give, or because of the bond yield this way, or because of this and that, or because of the unemployment rate. Okay, of course, there are 1,000 indicators. You can just pull one to complete the story. Definitely, you're right every time. But if you can tell me, that is correct now for the next 1 month, then I'll salute to you. Don't tell me so something already happened. Yeah, so that's why a lot of time when listen to analysts, unfortunately, it's a bit too late, huh? Yeah, so if you listen to that news or the confirmation, a lot of time it's a bit too late. So that's why trading, no one know the future. Even Dr. T cannot tell you tomorrow what happened. So that's why you need to do some, we call it the trend following. And then since we do know the uncertainty, all right, we need to apply, we call it stop loss, especially for trading. But in the longer term, why you are more confident? Because we got economy mode. We got the, now we got a new sponsor, although it's not really a sponsor, to be frank, right? The market can run away, right? If BlackRock is not doing well, huh? But I'm not surprised, right? Next year when the market reporting the result, who knows, BlackRock is still there, huh? It's a fact. I mean, if something doing well, why you want to kill this goose, right? Which can lay the golden eggs, right? If your stock doing well, keep them. A common mistake for those beginner, for investor is, wow, when the share price go up 10%, 20%, quickly kill the goose. You kill the goose, no more golden eggs already, right? For example, even you buy this golden so-called goose at the highest optimism here, even you lose 40-50%. If you never kill the goose, right? You see, golden eggs. Although this egg is not in the form of dividend, 2%. This is in the form of capital gains, not 20%, not 200%. From here to here could be, who knows, 10 times already. Although we are not talking about 70 times. Yeah, so don't envy on others. In every stage here, there are investor traders, they take calculated risk. Even Temasek take risk here. So don't envy on Temasek. Temasek need to safeguard, right, the integrity of a country fund. That is even more important than your individual wealth. Of course, Dr. T, my wealth is more important than country wealth. So that's why the more you want to worry about your own wealth, the more you worry, you dare not invest. And guess what? Low cannot buy, fair price cannot buy. And then of course in future you buy here. Nearly always. Why? And here 99 out of 100 analysts who knows may tell, wow, the best time. Wow, now the best of the BlackRock already. And guess what? Right. So there could be a black swan waiting for whoever, right? Thinking now is the best time. Okay, so that's why optimism is not everything, but a lot of time it could be a key factor trigger all this, right? So that's why we move on to the last the example. I want to show to you beyond the BlackRock. So for BlackRock, again, wait for the pullback. Okay, Dr. T nearly talked for 2 hours. Let me complete the last case study. Okay, now this is Alphabet or Google, right? Dr. T, right? This is a favorite or not favorite, but a common stock, as if like Apple, as if like Samsung, because you use a mobile phone, you use a search engine, or probably now you listen to Dr. T video in the YouTube. So all this belong to the Google. In fact, Google is beyond that. So that's why they have a parent company called Alphabet. Okay, by the way, this Google got two. One is called Google Class A. Okay, and one is called Google Class B. Both are very close. One has a voting right. The other one has a probably either lower voting right, whichever. Difference is very little lah. Okay, but if you have no constraint of this is a Class A 2825. Class B I cannot remember. Probably is cheaper. Okay, same thing at Berkshire. Berkshire also got one Buffett stock of Class A and B. Class A, the one you cannot buy now. The one over 300,000. One unit 300,000. Class B Berkshire you can buy. Not can, but could buy. Which is nearly $300 US dollar. Right, but this one I will say even that Class A for some people I will say all right. One unit only mah. Unlike Singapore need to buy one lot. 100 units. This is 2825. Okay. This is 2880. Just now when the market opening tonight, I take a quick look. Looks like it's going up again. Okay, so these stocks during pandemic time, right? In the last 10 months, if you read Dr. T article, sometimes I may not recording video, but I write article. I remember 10 months ago, I wrote one article on we call it Fang Man ATM. So Dr. T was Fang Man ATM, FANG MAN ATM, right? Facebook, this Amazon, okay, Netflix, Google, this is called FANG, and then MAN stand for Microsoft, right? This Apple, and N for this how come I suddenly block my blocking? Let me see. And for this Netflix, okay. Sorry, Nvidia. This Netflix I just mentioned already. Okay, so N for Nvidia. Okay, and then the final ATM, right? So called the Alibaba, Tencent, and Meituan, which is the Hong Kong side. All right. So anyway, you can Google for Google Dr. T article. So that's why Google is very good. I can Google Dr. T article, a few hundred articles. Or go to my website, ein55.com /blog blog. Right, all my few hundred articles. Including this article 10 months ago. I wrote it on the 29th October. Right, I wrote about this article was still around 1556 about Google. Of course, the rest of the Fangman ATM, right, probably except for that ATM stock, which is the Hong Kong one, now due to political economy, suffering one of their so-called crisis right now. Okay, yeah, so that's why this Google, together with the rest of the tech stocks in USA doing very well, right? So at the time, it's not even so-called low optimism, just a mid optimism. Okay, from mid optimism or the fair price all the way to the high optimism over here, right? So Dr. T, should I sell? You may not need to even a high optimism. Why? Right? The rule is very simple. You can buy high, sell higher, but you need to position, learn how to do it as a short-term trader perspective. All right, you see, even 10 months ago, you read Dr. T article, it can go up by 80%. This is not luck, right? Although the same thing can happen. You say, Dr. T, what if it drop by 80%? Then that will become the 1929 Great Depression. It become the dot-com bubbles. You see in the, okay, by the way, this one didn't have a year 2000 because this IPO in year 204. But you see Apple or Microsoft, those experience a dot-com bubble in the year 2000. Yes, I agree with you. The version 2.0 dot-com bubble may come one day. But just because you worry about that, you stop investing, then you may miss out all this, you know, the goodie over here, right? So that's why you need to learn to take calculated risk, right? So yes, the market eventually will have some form of correction, like this subprime crisis here could drop more than 50%, right? But even COVID-19 crisis, it did not drop to low optimism. This one, I think, just dropping around 30%, right? So this stock is so strong. Even COVID-19 is just a major correction, not really a crisis to Google or Alphabet. Okay, this stock in the last 10 plus years has gone up by 50 times. Although not as strong as BlackRock, 50 times it is 50 times, it is 50. Going in 1,000, come out 50,000. Going in 100,000, come out $5 million. But of course, if you go in $5 million, may become 2.5 million. It may drop by half. Yeah, I'm not asking you to use $1 million to buy. I just now, Dr. T, remember what I say? Use 10 to 20 giant stock. If Google go bankrupt, right, we still got the other so-called stocks. Okay, we still got other FANG-man ATM stock. Okay, if Alibaba go bankrupt, we still got Tencent. Okay, if Apple go bankrupt, we still got the so-called Microsoft. Right? If DBS go bankrupt, we still got OCBC. But Dr. T, what if everything you mentioned all go bankrupt? Then you also don't need to worry. Dr. T, why not you worry? Okay, that one is not the level 4 crisis, meaning Dr. T level analysis only analyze until level 4 the whole world. The one is beyond level 4, meaning level 5 crisis. Level 5 crisis meaning never happened before to human, right? Even worse than 1929 Great Depression. So it means likely something bad happened to the whole world. Maybe, who knows, there's one gentleman pressed one button wrongly, right? So it means at the time, right, the stock market may not exist anymore. Okay, so, but of course, Dr. T wish it never come. But I'm just talking to whoever the most so-called kiasi person. You know what's a kiasi, kiasu? Kiasi means afraid of dying or losing money. Kiasu means afraid of missing the boat. So those afraid of missing the boat, they may catch a falling knife, like, oh, buy low, get low, buy low, get lower. So that's why those kiasu one, you need to buy those dividend stock, right, as a minimum protection, or at least you follow a trend. Those kiasi one, okay, kiasi one is the same thing, huh? You need to also have some form of dividend protection plus a strong giant stock to protect you. Okay, and finally, at least you know what is Google. If you do use Google every day, if you use a Facebook every day, right, you thought you're not paying any money. In fact, indirectly you pay to them. For example, you view Dr. T YouTube, is a free, but Google can charge advertisement. They can embed this so-called advertisement within that. So same thing for Facebook. You swipe, you read Dr. T article in Facebook, is free, and guess what? Right, this Facebook can every few articles or posts, right, embed the paid this advertisement. So that's why indirectly the free service of Google and the Facebook and many others, those kind of giant stocks, they're using networking. Networking is one form of e-commerce mode. There are billions of users in the whole world using Google, Facebook. Yeah, so that's why it seems like free to you, right? But actually not really free, right? Because indirectly you're paying for that. So that's why this form of enormous this asset. Same thing for Tencent and Alibaba, they have that, but the China government a bit worried. That's why nowadays you see the recent news, they want to limit those stocks, China business, with a lot of this large database to get listed in the overseas, for IPO. Yeah, so they tighten and tighten. I'm not surprised even Baba maybe delisted from US. They got the this dual listing in this New York site. So that's why if you want to consider even Baba, follow like the Temasek lah. I heard like the Temasek last time sell Baba, also buy at the Hong Kong site. At least you change it, right? So that if anything the most severe happen, right? Either China or US kind of like want to delist those China giant stock, from US side. At least will not affect, on your US side stock. Okay, again, right now they are kind of like under like falling knife of the share prices, Alibaba and Tencent. Oh, sorry, I'm going a little bit to the ATM machine. Right now become a negative ATM machine already, huh? Okay, so beware of the Hong Kong stock, because Hong Kong, the level 3 or the country going down, whereas the level 3 of the US tech stock is doing well. And then the means the country, level 3 means country. And then the level 2 meaning technology. So just like I mentioned about the FANG main ATM, that's kind of like telling you the sectors of it. So Google aligned to the level 2, aligned to level 3, technically also aligned to level 4, but no one know about level 5. Okay, don't think too much about level 5. Right? You analyze until paralyzed. So when you think too much, no stock you can buy. You see, even you buy at the highest optimism here, even assuming this correction could be more than 60-70%, but this Google will not die. But of course, one day, right, Google may disappear. So Dr. T, where's the Yahoo now? You see Yahoo, right? 20-30 years ago, still quite famous. At that time, remember, Microsoft still want to buy this Yahoo. Yahoo say, I don't want to sell to you. Then after probably another 10 years later, right? In fact, Yahoo, I think, sold to this Horizon, right? Is it Horizon? Yeah. So that's why, and that selling price, if I remember, was only 10% of that, the so-called many years ago when the Microsoft want to propose to buy over. Yeah, because we call it competitive advantage. So I'm not surprised one day no one use Google anymore. So maybe you use another ABC so-called search engine, or at the time no one use search engine anymore. So that's why Google is smart. Before they lose a competitive advantage in the search engine, now they go to artificial intelligence, right? So for example, is the one, the chess game, the one who beat the so-called world chess champion. The one is the so-called the artificial intelligence. The one is called AlphaGo, is it? I cannot remember. The one is chess champion, not the Go. Okay, same thing. From YouTube, go beyond that. Now even they want to plan for the electric vehicle, the brain. Electric vehicle, you got the AI chip, the so-called driverless system. Then you need the GPS, you need that. So that's why Tesla, you have that system. But Google, same thing. Apple, we got Apple, potential Apple car. So you see Google, you got your own system, the Android system in mobile phone. This is a brain. So it's beyond, right, so-called the search engine. But if you compare the counterpart, we call Baidu, Baidu in this China. You see, Baidu is kind of like losing a bit on that competitive advantage, because people can go through the WeChat, the Baba platform, right? They can actually technically skip that kind of search engine, right? So that's why Baidu a bit missing the boat already, Yeah. So that's why last time we used to call this BAT, Baidu, Alibaba, Tencent. So that's why, because of Baidu coming down, so in the last 10 years changing to ATM machine, Alibaba, Tencent, Meituan. But I'm not surprised. Who knows? Meituan may not exist. You think it's possible? I don't think China government will kill the golden goose, right? Especially nearly everyone in China, they have to use the Alipay, right? The WeChat, this Meituan service and so on. I believe that is just a correction, but again, we no need to put all the eggs in one basket, right? So again, I never ask you to buy any stock. There's no personal financial advice, right? Just remember, for educational purpose, no one knows the future, but if you think it align what Dr. T telling you so far, okay, I only have 5 minutes before it's 2 hours. I think probably it's the time I need to wrap up. Otherwise, the story become 10 hours. Okay, in Dr. T time here is almost midnight already. Okay, just originally on the plan to talk for 1 hour, talk until 2 hours. Okay, now we continue. Say goodbye to 80%. Okay, although you could take action 10 months ago when you read my article. So next time, do not play when you read my article. Okay, especially when you read my article at the below so-called fair value over here. Okay, we continue. All right, looking at the medium, so-called the short term. Short term strong momentum. Even you missed 10 months ago, right? In my public webinar, Dr. T conduct public webinar every month. So you see all these are the public webinar potential opportunity. So especially starting from May, right, a few months ago, right? The time I record this video is in August. So May, June, July, even August, 4 months consecutively in the public webinars, I mentioned about this Google, and especially in the May. This is a very nice entry point, 2229. Okay, and tonight is already, I think, more than 280. Tonight go up a bit. Okay, so do you think you can one day break the 3,000 points? Possible. Who knows, the time you buy 3,000 points, it may correct down by 10%. Possible. You never know. So again, this is 3 months go up by 30%. This is actually 10 months go up by 80%. This is actually roughly 12 years go up by 50 times. So all depends on time frame. So no need to greedy. No need to say I must get 50%, because right, you may not have that kind of risk tolerance level. To have that, right, especially if you do not have optimism, this is a potential more than 50% loss you must go through. How painful you are, do you know? You can buy Berkshire, drop by 50%. You buy Google, more than 50%. Yeah, you buy Apple, can drop more than 50%. It's not easy. Okay, when you look back, it's easy, but when you're in within a thunderstorm, not easy. So that's why optimism can relieve your pain, right? Although no one can buy at the lowest point. Okay, so that's why every time when the price below the intrinsic value here, all these are the so-called opportunity. Okay, same thing for the short term here. Right, although you may not need to buy low, sell high. Right, even Dr. T, can I still buy some more? At least you wait for correction, huh? So we move on to technical analysis. Look at the nearly the latest price. Right, this based on last Friday. Now tonight go up a bit only, huh? So you look at 50 days trending up. So allow Dr. T to draw for you. Apply the simplest of the technical analysis. Got time, chance, Dr. T next time can teach you more advanced TA lah. You see, 50 days trending up, right? Break below the 50 days. This is the one installment payment. Right, this is another, you see, correction below 20 days. Right, this is a second so-called installment payment. This for 10 days. This is for the this 20 days over here. You see, cross a little bit lah. Okay, touching. Okay, here also touching. Huh? Depends on how do you define the touching here. Huh? Okay, later on, same thing. You see another round going in. So that's why there are multiple rounds, right? If you're afraid Google, after a few months later, will go bankrupt. So you ask Google to pay you, right? Dr. T, I want Google to pay me every month. Hey, but don't assume every month make money. So far, of course, you look at here. So far, this is 100% winning rate. But there are time, the 50 days may drop down. There are time, who knows, within 1 day, it may drop by 10%. You never know. Hi, look at Alibaba, Tencent can drop over the last 6 months nearly 50% already. Huh? That's important. Huh? Okay, so we continue, right? So why is important? Because we need to actually learn to take action for trading. Huh? Okay, Dr. T, may I know what to take action right now? Right now, this is already breaking a new high already. Huh? So currently, whether you're using breakout strategy or using moving averages on the high side. So according to rules, please wait. Okay, but okay, I wait, then later go up further. Sorry, right? You don't follow, that is an issue, right? Because you may catch one of the high over here, like here. Although if we momentum still continue, then we call luck lah. So that's why trading, there are certain trading rules you follow. Right? I'm not saying that you cannot buy the highest and then sell even the another new highest. Then you need to pray every day. Biden, please don't say something wrong. And please, Federal Reserve, please, print more money. So why use a hope strategy? Whereas you can apply, for example, E for entry here. For example, when you drop below 10-20 days, cancel vacation for 3 days. Right? You E for entry. For example, if I draw over here, right? E for entry somewhere here, and then S for stop loss here. As of today, still waiting. Yeah. So, but as Dr. T mentioned, this is called technical analysis. Technical analysis, in fact, so far, I think 100% winning rate is impossible, right? But at the same time, it can improve your probability of success. Because when I see in a bull run, you look at it, nearly all cases or even all cases successful. But there are times, for example, you can see like here, you can see you use TA lah. You buy low, even you use a breakout. You see breakout, you may catch the so-called technical rebound, right? So that's why it's not easy. Within here, there's still a down cycle as well. Yeah, so there are bull or bear within, there are cycles within the cycles, right? So again, define which kind of time frame of your interest. Okay, so now it's already 2 hours, right? Allow Dr. T to show it to you. Dr. T, don't end there. I want to learn more, right? But some of you, if you can listen until now, I already salute to you. Although I will say some of you kind of fast forward to here. If you can listen until here, I will reward you with another 4 hours of learning. So these are extra 10 strategies I will teach to you. I especially prepare, technically not 4 hours, even more than 4 hours. Usually I even teach up to 6 hours, right? So you don't mind, right? Invest one of the Saturday. Every month I have one webinar for the public, which is free. So I'll cover how to buy low, sell high, right? Bullish and bearish market, the economy, right? Long-term, short-term. Even I'll teach you the market strategy, the Cushing, Warren Buffett. Not their strategy as it is, but the reverse of it. Meaning use them as a sponsor to protect you. Shorting, passive income like REITs, dividend stock, how to do spring cleaning, right? Time to global financial crisis. What to buy, when to sell, for example. Fundamental, technical, personal analysis, LOFTP, applying in more case studies, over 20 case studies. And market outlook today, I only talk about US and Singapore. Next round, I will extend to China, right? Hong Kong, even Malaysia, right? And then also the latest, right, of all, right? So every month of this webinar, so you can register these 10 strategies of stock investment over here. Next round will be on 25th of September. Right, even you view the video later on, all right, it will never be outdated. You just go to ein55.com to register. So in this website, will update the latest webinar date. Every month there'll be one, usually on Saturday. Okay, try to log in earlier by Zoom. All right, I'll give you 3 bonuses. In fact, no need to wait lah. Straight away, the 2 ebooks you can get from ein55.com already, huh? All right, but during the session, I'll give you a free stock screener. Right, plus we'll do a bonus stock analysis, because today Dr. T just pick, let's say 4 stocks. For example, I also kind of like a chit chat on the Baba, on the Tencent, okay, on other stocks related one. Today it may not be just 4 stocks, right? But in this 4 hours, which usually I'll extend even to 6 hours, right? I record from 1 p.m. talk to 7 to 8 p.m. Okay, but you don't need to stay, for so long. If you're hungry, you can log out earlier. Huh? It's fine. Okay, because Dr. T enjoying my retirement life right now, right, for many years, right? So I'm just hoping that my sharing can help more people. Huh? Yeah, in fact, you don't need to pay 1 single cent. Invest in yourself. Always remember, you are your best investment, right? Invest through learning Dr. T, free this investment knowledge. Feel free, go to my website. I have a few hundred articles. You just /blog, B-L-O-G. Then you can read the past articles. My past video in the YouTube is also stored there. And many of them is timeless, meaning even you look back, they're always correct. Okay lah, I think it's already 2 hours so far. Consider one of the long version of Dr. T educational video. Okay, so with that, thank you very much, all the audience who view until here, and all the best to everyone. And just remember, stock market in the short term is a voting machine. Stock market is a long term is a weighing machine. Integrate the voting machine and this weighing machine together. Have the best of the short term to long term, huh? So wish everyone all the best, and have a profitable trading, huh? Okay, and goodbye. I'll stop the video here, huh? And I'll see you next round in the next webinar. So go and live one, huh? Next round will be live one, en55.com, huh? Attending this strategy. And also recommend to your friends, send this video to them. If they don't have time, at least read some articles good enough. For sure, you can find one Saturday which are free, right? In the near future. Huh? If you're not free in September, at least in October, it doesn't matter. Okay, that's all. Okay, take care. Bye-bye.